If you ever entered a trade and watched it instantly go against you, this episode we hope is going to fix that. Most traders are right about the direction of the trade, but your timing is off, you're going to lose money. We're going to show you the signals we look for before entering any trade.
Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise. No scripts, no safety nets, just raw market talk. Lock in. It's time to go beyond the trade.
Beyond the Trade is for educational entertainment purposes only. Nothing you hear should be taken as financial advice. Always do your own research and consult a qualified professional before making investment decisions.
Acro.
What's up, buddy?
I'm pumped for this episode. This is one that I'm incredibly passionate about. I know I sound passionate about just about gosh darn everything that we talk about, but this one is really one for me. And please listen to the end. Our Sunday bangers are going to be good. I'm going to talk about some new stuff. This is going to be an exciting one. How do we think about entries? I'm telling you, this is just like you said in the intro. It is huge. It is huge. You can be so right, but so wrong at the same time. And that feeling is just, it's almost like, I really stink at this. It's a downer, brings you down. So this is a very passionate topic for myself.
Yeah, I mean, and it's, this isn't about picking the absolute bottom and the absolute top. It's about the best place that has basically the best chance of reward as to where you get in. It's not always the very bottom and it's not the top. You want to, of course, get as close as you can, but this is about following signals, things that you see, that you get accustomed to, that you've seen it 100 times and you expect the same results, basically.
If you're following key signals and trying to find the most value, would you draft Caleb Williams at 1 again?
Knife in the frickin' heart right there, right out of the box. Right out of the box. The Bears. Hey, I'm going to set the record straight, though. So I went into this game as a Bear fan with the complete... I accepted the fact that we would not beat Green Bay in Green Bay. The fact that they played it so close, that was a win for me. Because they got to come to Chicago next, 2 weeks, I guess it is. So it's going to be rematch time, and that one's going to tell the story. It's my story, and I'm sticking with it. Let's move on.
I had to kind of take care of the elephant in the room, or should I say bear?
You bastard.
But something that I'm not bearish about is the stock market. At all. I'm telling you, I think things feel pretty good. I know we've been a little bit hesitant in the past, the past couple of weeks, but I think right now the stock market is really showing to be resilient. I'm a little bit nervous about Jerome. Obviously, This week we have the FOMC, and for those that are new, that's the meeting that they decide on the interest rate. So right now, the current probability as of Friday, which is a great tool, is if you just search CME FedWatch, or if you just search FedWatch, there's a tool that shows you, it's just they're taking data from futures trading on those interest rates, which honestly, I've never traded it before, but if I would have made a lot of money. So maybe I should look into doing that. But,
there you go.
That's a little sophisticated. But there's about an 85 to 90% chance that we're going to get a 25 basis point cut, which to me, like I've said a gajillion times, if a lot of people are in one boat, it's probably going to sink. You should probably jump to the other boat, right? There's more space in that raft. But I think here the Fed has really set the tone, and they know they've given us what we should expect, and I think we're going to get 25 basis points. What it's going to come down to is the verbiage and the outlook on whether we're going to be dovish or hawkish, right? Dovish meaning more cuts, hawkish meaning a little bit more aggressive on the monetary policy, meaning not cutting as much and saying we're probably going to hold off in the future and we're not as worried about employment anymore. So it's going to come down to employment and how they really feel about inflation. All right, the Fed is a dual mandate. stable prices and employment, maximum or minimum unemployment as possible. There are two jobs, so they're going to have to kind of moderate that, and it's going to be interesting to see how Jerome Powell speaks about it. That's the most important part. And I know, Acro, we've traded many FOMC together, so I'd love to hear your thoughts on kind of this week. And it's on the 10th.
Yeah, it's interesting because I think we our last episode was Santa Rally or Christmas Crash, and I think we started to see a bit of a Santa Rally start. But is that driving up in expectation of the rate cut? I don't know. I think Monday and Tuesday, actually, until it's announced, it's going to be an interesting week. Mm-hmm. You've got a mixed boat. Yeah, you got people that are being reserved. They're going to hold on and wait to see what Powell has to say. And, is this going to be the one that Powell gives the big middle finger to the current president and doesn't do what he's expecting? Who knows? I mean, I really don't know. But what you just said was right. Even if we get the reduction, what does he say in the meeting is really where that's the potatoes right there.
So exactly. And for those who are new to maybe, the FOMC or tracking macro markets, I mean, I would say the most important thing, if you want to try to build a passion for this or just be educated in general, is to actually watch the meeting yourself or listen to it, stick an earbud in at work and listen to it, because you taking your own analysis is really important. You can go look at what, Walter Bloomberg posts on his X account right after, because he's going to tweet all of the headline sayings, right? That's going to happen anyways. But I highly recommend actually listening to it yourself, because it's not like Powell's going to matter for too much longer. I was just having this conversation with a family member. I said, I'm kind of annoyed because I've grown to be able to predict Powell and things he says pretty well, I think, and have good expectations and monetize that. But then when we bring in a new Fed chair in May, it's going to be a new learning process, right?
Absolutely.
So it's eerily kind of similar, maybe. And you can see, if you're watching on YouTube, you can see what I'm showing on the screen. Also, if you haven't rated us a 5-star rating, we would really appreciate that. If you haven't subscribed or followed the podcast on wherever you get your podcast, we'd appreciate that.
Absolutely.
All the support. We are going all in 2026 on growing this and reaching as many, not for our benefit, but for everybody's benefit. We don't make a dime from this. And you know what? We don't care to, really. We just have a passion for getting to everybody and helping out as many people with kindness and positivity as possible. So
come on, how many of you guys wouldn't give your right arm to have an hour talking to Adam once a week?
I just did the spray bottle laugh there, like vomit in my mouth. But thank you. But here's it. So hear me out. And if you're watching, you see this. I'm looking at the weekly chart of the NASDAQ. This could be totally wrong, and it probably will be, but this feels eerily similar, I've said it, to December of 24 and January of 25. It was when QQQ had kind of topped out around 540 through December through February. It kind of stayed there. So, and it's a similar sense, right? The weekly chart looks very, very similar. I mean, if I go to a 2-week, it's somewhat reminiscent. And what happened in December of 2024 is Powell stated, I think it was December 16th. He said, hey guys, just like we've said the whole time, rates are going to stay higher for longer, and you need to start believing it because that's the way it's going to be. And so people up until December 16th of 2024 had baked in a lot more cuts than they did after that meeting. And we run that same risk here, but the thing is the expectations are a lot more moderated. So I'm not saying that this is going to happen. I'm just saying it looks similar. So even though history might mirror itself, in general, this goes for any stock, or any setup, it doesn't necessarily pan out the same way, but it's interesting to look at these patterns. It's something I love to do. But also think about market sentiment at this time. Trump had just been elected president, and everybody was bullish on that because, Trump is good for business and whatnot. And, he wants the Fed to ease rates and all this stuff. It could, and then into April, we see a dip. It could be a similar-ish setup with this being everybody's bullish about the new Fed chair. What if the new Fed chair kind of comes out and he's not what we expected, right? We all think about, we all have the same expectations for this new guy or gal, whoever. We all have the same expectations, at least anyone I talk to. What if it's not that way? So, again, I'm always trying to be devil's advocate. I would ask you all to do the same.
Yeah, I'm looking at last year's SPY. We actually hit our all-time high first week of December, right as the month started.
Yes.
And we stayed there all the way until mid-February, and then we took a pretty good dip.
Yes, because Trump started talking about tariffs.
And we didn't get back to those all-time highs until June of this year.
Yes. So,
but you go back and look, even I guess the year before was a little bit different. It was a little bit more stable and with steady increase there from the big belly that we ran through in 22, 23. But yeah, it's in the weeks that we have Powell end of the year. I wouldn't be surprised to see some run up. And when the rate gets cut, nothing happens. The market retracts some. Are they gonna push it forward, or is it gonna be a big enough change when it's announced that the market takes off again? And I honestly believe we're gonna crack the all-time high on SPY before the announcement. We're right there.
That would not surprise me either. So I think that it's gonna, long story short, I think that this is going to be kind of a non-event. I'm just saying there's a potential that it could, just be aware.
Yeah.
Be aware of different patterns and just know, things have been pretty broadcasted to us to this point, but there's still uncertainty going forward. And it's an exciting week. And just like Acro said, there's likely to be low volume up until possible to be low volume. We may just drift upwards, which is kind of what I expect. And we were correct. Last week, we assumed we would kind of drift upwards as the junior traders are just sitting there hitting the buy button while all of their bosses are are on vacation with their family for Thanksgiving. So
right,
going home. But yeah, that's kind of my market overview. I want to get into how we take entries. So
that's it again. And for those listening to understand that what Adam says and what I say, we're coming from, in a way, two different perspectives, of one being more trading commons and one being more focused on trading options. So, and both of those are so different on where you enter. That's where I think this will be a good episode, because I do things totally different. I can care less about the FOMC next week. I play what's in front of me at the moment. So I'm not looking about 3 weeks down. I'm looking at what am I going to get here today in the next couple of days. Even if I'm buying a month out on my options, I usually don't keep those much more than a week, but I buy the time in case I am wrong. When I get in, I'm not going to get destroyed. But you're the way you trade is different. So everybody's got to kind of think of how are you trading and find what clicks for you. And I think we'll get some of that out today.
Yeah. That is the plan, and charts look volatile, so this is very important. First things first, I've been asked many times when to enter, right? Just when should I enter something? What is the signal to you? And for somebody who's not really a trader, if they're asking me this, it's a hard question to answer, right? What do you think through? Okay, well, do you want me to spend 30 minutes sitting you down and walking you through it, a gap up and a gap down and all this stuff, and Bitcoin's doing that, and whatever. So no,
Exactly.
not going to do that. So what I say is the best time to enter is when the market is screaming at you to enter. And the worst time to enter is when you're just trying to find a trade.
Mm-hmm.
So it doesn't really answer the question technically, but I believe it answers the question fully. And I'll explain. I mean, you Mike.
Yeah, what you were just saying is just, it's true that if I go back and look 2 years ago, I had to take a trade, period. I had to be in there taking something.
Yes.
And you force trades that you never should have gotten into, and you just get destroyed. Now there's weeks that go by, 5 full days in the trading week where I may only trade 2 to 3 days a week, because outside of that, I didn't see anything that interests me. But the ones I take now surpass those ones from 2 years ago tenfold. One trade can make me more than I would make in a great week 2 years ago.
And not knowing that you can sit on your hands and being comfortable doing that is a huge display of self-control. And it's very difficult.
It was very hard to learn.
When I say the market screaming at you, I don't think you understand that the market is screaming at you until you really feel it. It's also kind of like the saying that I've heard, I don't know if anybody else has, but if you keep thinking you're at rock bottom, you're not. You'll know when you are, right? It's right. It's kind of that. You just know it. And if you're guessing, you're probably forcing in a trade situation. But in life, it's the same thing. You shouldn't be guessing. I mean, everything's an educated guess. But for example, I'll give an example. Have to if I'm gonna say this, but April. I mean, it was obvious. Okay. And that kind of leads me into another thing that I really need to talk about, which is volume. Okay. And of course, I've got notes. I mean, I'm ready for this episode. Y'all better strap in. We're 17 minutes in, but I'm 18, and I'm telling you this, I might go for a while. Zoom out, right? I'm huge on zoom out. Look at the daily, look at the weekly, look at the monthly. Don't just get on your stocks app and hover over it and see where the price closed. Go just create a TradingView account, tradingview.com. It's free, and learn how to read a candlestick chart. There's probably a 3-minute YouTube video that you can go on there and learn. Okay. If it's green, it closed higher, and then the wicks are just where it touched. So learn how to do that. So know where things actually happen, and learn how to read volume. Obviously, the volume on the bottom is the amount of shares traded in that time period. So if I'm looking at SPY, this is the S&P 500, okay? I'm zooming out, and I am seeing, let's just kind of even take kind of the biggest dip off the screen. I am seeing in February of 2025, volume starts increasing as we go to the downside. Okay, well, yeah, that's selling volume. Of course, it's being absorbed. Some of the shares are being exchanged, but there's been no real strong screaming bottom. I don't see the drift up from March to March of 2025 as a meaningful drift up, right? I didn't see it as a meaningful bottom. And to be fair, you could almost say the same thing. Well, we didn't drop near as much. The drop in February of 24 was 10%. So one could expect, there's just so much to say, but one could expect that this was going to have a bounce. And, where did it top? Okay, well, it's exactly where the former bottom of the range was, which was about 575. Right, it's exactly where it topped. But volume, as soon as the market got down here and you zoom out and you're seeing volume days that are the biggest since the bottom in 2023, right? You zoom all the way out. These days right here during the tariffs were higher volume than this bottom right here in 2023. And so when you see that, You have to tell yourself, first off, you have to be able to read a chart. And then second of all, actually, you don't even have to read the chart. Just look at the volume bars and say, okay, this is an inflection point, right? Maybe it's a temporary bottom, maybe it's a long-term bottom, but you see this, I don't see a single candle, or I don't see a single volume bar higher than this, and I'm looking at 4 years. Okay, the only ones that have been higher than that was the highest volume day since COVID. I mean, and that was a bottom that went straight up. So that was when, to me, the market was absolutely screaming, buy anything, just throw a dart at a board that has a bunch of tickers on it and buy that, right? Whenever you start to see that, buy. And that's when I, tweeted for the first time in a while, I tweeted Soxel, SOXL, highest volume day ever in March. Actually, I tweeted it, I think, on March, maybe April 4th. And that was, it's the next couple of days actually surpassed that volume. It held support. But when I saw that highest volume day in history, you zoom out, you do not see any higher day on SOXL. And it really doesn't matter what it is, but it's a triple leveraged semiconductor ETF. So yes, this is a risky play, but still the volume is there. Shares are being exchanged. And then I see a series of even higher volume. Absolute screamer. This was when SOXL was in the 8s. It's at damn near 50. So that's where I wanted to start. Acro, do you have anything to pitch in?
I'm trying to learn something here, buddy. Mine are totally different. Volume is extremely important. And I've talked about this before. I mean, I play the indicators that I have, and there's probably 4 of them. And when you start working in tandem, it's time to pay attention and get in the game. And I've said it before, but in case you didn't hear or weren't here for it, the main ones I use is I do use Ripster's Clouds.
I have those on right now.
I use VWAP. I use the 5-minute orb. And then I also have pre-market high-low, basically. That's it. And all of those give me something which is, number one, they give me a level. So I got the level with the pre-market low where, how far down it went, the high, how high up it went. And a lot of people don't pay attention to pre-market. I find those plays sometimes are just absolute gold. And the way I use the clouds is, I believe it's on the 9-minute EMA. The cloud will go from red to green if it's up or down. And I look for a change. So if it goes from red to green, it's indicating upward motion, right? Then I'm also looking at one I forgot was RSI. Where is it on the chart? VWAP. I've learned more about VWAP in the last month than I ever thought possible. And it's a lot stronger than I ever thought. It resets every day at the first candle. So what happened yesterday is unimportant. What happened pre-market, unimportant. When the first candle opens, that's where VWAP is anchored at that point, basically, for that day.
Do you have after hours volume on or off?
I have it on, but on VWAP, it doesn't matter. The only one I've found that it really matters on is RSI.
Okay. And for those who are new, VWAP stands for volume weighted average price. So it's basically the volume, the average price of the stock based on volume during the day. So when you go and you grab the VWAP here, you can take the kind of the borders off, but yeah, you can kind of click them off. And I just like to keep the middle one. But that's what Mike's referring to.
Yeah, and it's the important thing about it is all this big money out there, all these brokers, they have orders to place, to buy or sell for, millions of shares. And their customer that's given them shares to get rid of or to buy, they expect to be bought at close to VWAP. That's why it's, number one, so important. If your broker is buying a dollar above VWAP. You're the guy that's giving him the money to buy those shares is wondering what the hell is he doing buying it up there. You know, a good broker is going to buy close to VWAP or below. If it's a buy, he's going to sell, you know, the same way. So it's a very important thing. And I want to do, I've said this before, I'll do a video on it, but I'm learning so much more about it that I didn't know. It's gaining power for me in my trading. And the one that I use on TradingView is called VWAP Colorful.
Okay.
See if I can. It tells me who's.
Yeah, I see it.
Okay.
Are.
Yeah. So what it does is when it's going up, it's
go.
green. When it's going down, it turns red. It's just the quicker I can see these things and visualize them, the easier it is, and the quicker you can get in a trade. But back to where I started with it, those indicators, and I'm looking at, let's pick one just for grins, SPY on Friday. We had on the 5-minute chart, which is what I play for options, just prior to open, it bottomed out, and I don't know, there's maybe 10 green candles in a row coming into the open.
Yeah.
First candle's a big green candle. The top of that wick is the upper orb. The bottom of the wick is the lower orb. Or being opening range balance. So that first candle, the range that it went from top to bottom.
Yeah, so just this first from wick to wick, basically high and low, high being 685.39 and low being, sorry, that was low, high being 686.56. So
yeah. So there I look at, okay, I go the third candle after that. So the fourth candle at open, which would be 9:45. Big green candle starts coming back up. It stops dead at the upper orb. That's where that candle closed. The next candle opens exactly at that spot. I'm looking at where's the clouds. They're green. VWAP is green. It's on the rise. My negative on that one was RSI was above the 70, which above 70 on RSI is indicating that the stock has been overbought.
Mm-hmm.
But the move was strong enough. So I threw RSI out, and I got in this trade right when that first candle broke the upper orb, right around 686.50, 60, somewhere in there.
Yep.
And not a huge move, but it ran right back up to 683 or 688.50 almost. It starts leveling out there. That's when I start losing interest because its movement has stopped. It's kind of getting dormant for me there. I probably got out of that trade. I would have to look, but I would say it was right around 1040. But that was a 35% move on my options.
Awesome.
You know, from there it went down. So now how do I get back in at that point? I don't. I'm done with it. Now I can look over a few more candles and see the clouds going from green to red. I see VWAP starting to go down. It's giving me indicators that, yes, it's now we're following a downtrend. RSI is already back to its middle ground. So I have no interest in that because I don't feel I have enough to predict, is it going to continue or is it going to reverse on me there? So I'm done with it at that point. But you move forward a little bit and you start getting some interesting things happening where it hits that lower orb again and starts bouncing. Well, it sat there the rest of the day and bounced between the lower orb and the upper orb all the way, basically, it'll close. So just chop. There's nothing there. I'm fine with that. I want to catch one move, be in and out within a half hour. Perfect.
Yeah.
But that's how I get in, is looking for things like that. And I don't use just one. I want to see at least two indicators giving me an indication that this is the direction that the stock is going, whether it's up or down. If three of them are hitting at the same time, that's like, man, that's gold, because probably 80% of the time it's right. And again, these are never always right. There's no single indicator out there that's going to tell you and be 100% right all the time. Not possible.
And that is what I took from that, Mike, aside from your amazing technical analysis, is is the convergence of many different signals.
Yes.
And even though one signal, right, I may be here looking at support and resistance and volume, and maybe that's a little bit, on a daily chart, and Acro's looking at it on the 5-minute chart with the RSI and the VWAP and all that stuff, which I look at too from time to time. The same theme is there. It's, you have the things, and I'm going to get into more, right? Don't you worry. You have the things that work for you, that have worked for you.
Right. I mean, you can dumb it down and say all you need to do is pick the right direction, and if it goes up and you're betting it goes up, you made money. I mean, that's the simple way to think about it. But when you get in and it throws you a false signal because you weren't prepared for it, you can't hit the sell button fast enough sometime to get out. And everything was telling you to not get in. But you saw that one indicator, oh man, this thing's going to go.
Mm-hmm.
Now, then again, it gets more confusing to that in more detail. But I mean, what I described, I think, is a great place to start, because you also want to have levels on your chart of support and resistance that go back further, because those numbers always repeat.
Yes. Great
so if you're sitting right at a support level and you think it's going to go down, well, you better look back, because it may not. It may blow through that level. What's your next level? What's happening? There's so much more to it, but for the basics, if you can be right 70 to 80% of the time based on 2 or 3 indicators showing you something, you'll make money.
Exactly. And the repetition of old levels, yeah, obviously you've gotten so much of that from past episodes, but that's a big thing for me. And in all of this, not all of your indicators or signals are going to be going in the same direction, right? You may have one that...
Well, that example I just gave you, RSI was telling me don't get in. It's already been overbought, but I'm looking at other things. I'm looking at a level that I had set up at 683.30, and I'm going, man, that was a strong level. And I got 2 other indicators telling me to go long. So at that point, it's like, well, screw RSI. I'm going to ignore it, because it's not always right. None of these are always right. They're just giving you a sense of what direction that particular indicator is indicating it's going to go. And I have one that's telling me it's going to come back down.
And it becomes a risk to reward play.
Exactly.
It is simply risk to reward.
Which we'll get into that. I think that'd be a good episode in the future. Also, you guys listening, if there's something you want us to cover, please, by all means, either get us on X, put it in the comments on YouTube, wherever you can comment. Tell us what you want to see, and we'll work up something to do an episode on it.
Yep, we see all the comments. We respond to them, so please.
With that, I'm going to step off my soapbox and let you run.
Nah, the thing is no, but that's the thing about trading is no matter what time frame you're looking at, no matter what indicators you're using, the same principles apply, right? The same principles apply. There, you've got to have convergence of many different signals. So for me, I already explained, a feeling. It's a general feeling of that there is something happening that feels like an inflection point. Okay, the market seems to be screaming at me, but sometimes that's hard to interpret. But more than that is just do not force something. Let it come to you is kind of what I want to give everybody out of that.
And what I do is totally different than what somebody else does. And you'll have gurus out there that are going to tell you that if you're watching a 5-minute chart, you're wasting your time. Well, it works for me.
Right. So exactly. The different things work for different people. And I don't criticize other people for the things that work for them. And I don't expect them. I mean, I expect anyone to criticize me, but I hope that they don't, because what works for me works for me. So the next thing I want to discuss is themes of the market. It's important to you talk. My dog is barking. Oh my gosh. You talk. You say something that you think about themes.
What I was going to say was I was going to actually put my mic on mute and go grab something to drink while you were going to go on your rant here. So
okay, well then you're going to hear some dog. Gosh. Okay, so
Piper. Wait, maybe Piper wants to say something. Maybe he's got a little different indicator going.
But nice try. themes. Themes are very important, right? You have to know what's going on in the market, and it's the same thing with the FOMC. What we talked about is actually listen to it yourself. Actually follow on Twitter people who are talking about the important things that are going on in the market, right? Like what trade is hot, what trade is cold, and a lot of that is from news flow. And I think the best thing to do for knowing entries on a broader time frame, I'm talking daily, weekly, monthly, if you're trading commons, if you're just trying to find the right time to buy stuff, these opportunities do present themselves. And I think whenever, and I say theme, it's a pretty broad term, but if you just stay in the know and educated on what's going on, if you follow the reaction and the commentary to the Nvidia earnings call, you kind of get a sense. It's important to get that sense and keep that sense. Because once you lose that sense, you lose touch with the market, right? Again, all we're trying to do is just hitch our carriage to the horses that are going in a certain direction. Your market buy doesn't do anything unless you're buying the 100 call on open door, right? You know, who's going to move the needle on something with that, like that, with zero volume. But on a common stock, you're not going to do anything. So just hit your carriage there and go. So that's it for that, kind of a broader one. And Acro alluded to this, but it's very, very, very important to look at old levels. So when stuff is at all-time high, there are no old levels. Understood. And, of course, by levels, we mean support and resistance. But Tesla, I guess, is a good example. Tesla has levels that we can use and we can mark all the way back from December of 2024. These ones are, and in fact, if we just do a little experiment, we go place a level at the top of November 2021, this 414.5. When does it show back up? Wow, shocker. It was the support from our range here. So that is probably one of the more obvious examples that I could ever tell you is these levels reappear. Just literally go on your daily chart, go on your weekly chart, just place a line, a horizontal line at the bottom of ranges, or the bottom of, a low, a significant low, or a significant high. And another one, this is one I always like to show people when I want to prove that technical analysis is actually legit.
It's all legit, buddy.
It is, but I go to SPY and I go, all right, marking significant highs and lows is super important. We're just going to go ahead and delete this line right here. Marking significant highs and lows are important. 2020 to 2021, we had a huge run up on SPY from $220 to $480. Crazy. Okay, well, that's when inflation started to hit. The market started to dip. All right, well, just for gigs, I'm going to throw a line at the very top here, complete top, 479.98. All right, well, I'm going to keep that. We may never get back there. Oh, wait. We broke through there eventually. Okay, well, I don't need to delete it off of my chart because this is a line in perpetuity. Why would I not just keep it there? So let's see if it ever reappears. Doink. Well, I'll be darned. We got within $2 of it. If you zoom out, it looks like it taps the line during the tariffs. Now that's something worth mentioning, right? These long-term highs and lows are always worth marking. You can throw a little note by them or whatever. I think we've talked about this before, but this is it. Old support or old resistance becoming new support, right? So something that was hard to break through in the past can become a new level of, okay, we're good, new support in the future, even if it's 4 years later, 3 to 4 years later. Do that on every chart. I don't delete my lines unless I have to, unless it gets way too cluttered.
Interesting. I mean, I'm a little different. And what I learned was, well, again, I'm on a 5-minute chart, usually on options. Mm-hmm. So I set so many levels that at some point it usually gets pretty confusing. So what I'll typically do is about once a month, I'll clear all levels.
Yeah.
And then I'll do what you do here and go to the daily and the hourly and look back as far as I can and start resetting some of those that are obvious. But then for my next 3-4 weeks, I don't have all that other daily levels that I was setting in there. They're not the big levels, you know.
Yeah.
Those are the only ones I have. So, I mean, it can get confusing. And I've done it. I've posted them in our group before where, my God, what are you talking about, Tussle? You got 50 lines on there. 50 different levels. Well, they're important at the time, but they're not important a month from now. But those big levels are important. They stay.
And this is a testament to that. So for me, that is a huge, huge, huge convergence thing. So I've gone through a couple of things. Another one here. This is Google, okay? This is one that I've been a big fan of. If I'm going to go to...
It's funny you just clicked that because I was just about to say that a lot of these levels are at big round numbers. You just clicked 139 even. Boom. 139.20 is not, even though that might be it's not important. It's where's that big round number at?
Exactly. And because people want their buy order to be exactly $230. But here's the thing. I know a lot of people who go on their Vanguard, and I have a friend that I said, dude, hey, I really like Google as a buy. And he went on his Vanguard and he said, all right, I'm going to place it for just below 150. What? Or so, it was within this week in May of 25. He said, I'm going to place it just below 150 because I want to be able to have an average below 150. I think it's going to get there. The thing is that so many people think that. So the best thing to do is just market buy. Just market buy. It ain't that deep. But here, if I marked this high from 2021, as it comes up again, 2021 and 2022 February, mark it again. Where did it come back to? Came back on September of 24. Came back during tariffs. And here's the thing. Once I saw, and I think I've talked about this in one of our first episodes, but this right here, this candle right here, this one, okay? It's such a silly candle.
Boy, look at the volume.
Bang, 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 bang. Like I'm Mike Breen talking to Doris Burke. Bang, bang. Sorry if I just broke your eardrums. Or for those that have one eardrum.
You can tell Adam gets excited talking about this. This is good stuff. This is a good episode.
About stocks? Or
yes.
Oh my gosh. I told everybody this was going to be a good one. So old support turned new resistance. Okay, this one right here. High or low right here. Tariffs, right? High or low. And this brings me into my next one, one of my other topics. These all converge. Old resistance becoming new support, old support becoming new resistance. I think we all get that topic. It's a thing. So news. Tariffs, in a way, was just a big news. It was just news, right? News happens, right? The government's buying 10% of Intel. Woo! Right? Stuff happens, okay? What do you think happened in this candle in May with Google? What do you think happened? I mean, how often do you see Google go down 7.25% in a day? That's very rare. It didn't even happen during tariffs, okay? So for context, crazy talk, okay? So what happened this day was news. Apple came out and said that they are releasing a new browser or something like that. It was just the stupidest headline. And everybody sold. Everybody sold. And I look at this, I say, there's more volume on this day than there was on any of the tariff days. You zoom out. This was Google's highest volume day since the bottom in 2023. Wow, shocking. This is crazy. Bye. Okay? Not that difficult. Not that deep. Okay. If we look back in 2022, volume means inflection point. I'm not saying it was if it's at a high, be careful. If it's at a low, it's probably buying volume, right? Depending on where it is in the whole spread of things, right? Just know that. But here I'm seeing this go three different lower highs, or sorry, higher lows. Three different higher lows here in 3 different months, and this was some goofy news. Okay, volume. I thought the news was overblown. Okay, that's 2. Support. Well, I mean, we kind of have a trend here, but it's fairly close to our support that we've already tapped. That was a long-term support that already held. Okay, there's 3. Volume. I mean, market screaming, right? That's 5 out of 5. I don't know if I repeated anything. And not to mention themes. These guys are in AI, and they also have driving cars. They own Waymo. So you know what I'm saying? Actually, this day might have. I can't recall. Actually, I cannot recall. No, this day was when Tesla released their robotaxis. Okay, and then this day was from the Apple. This day was from the Apple announcing that they're making a browser. Well, okay, has anybody heard of Safari? But I know it's like a browser you can download on any computer.
But it's like a lot of the old saying that I'm sure most have heard, buy the rumor, sell the news.
Right. So, well, I mean, people were selling the news and whatever. So, for me, regardless of which one that was, and yes, they own Waymo, and Tesla, released their own robotaxis. The whole world is going to have robotaxis going forward. It is the future. So pretty sure they're in a good spot, and they're in AI. So just a theme as well. They're totally in it. They're in AI. AI was hot. Boom. Easy. So how do I think through future catalysts? So if you're taking a long position, it's important to know what the catalysts are, right? I don't typically buy something unless it's a mega cap, right? Like Google, they have catalysts that will come, but they're a mega giant, right? If you're buying something that's, for example, APLD, that's my kind of go-to. But if you're buying something that's not a mega cap tech company, you need to at least have an idea of, first of all, why you're going long something, right? That's not just SPY, okay? Because it's very hard to beat the market. Very few people do it. So why? Okay. Well, there's got to be catalysts. So for me, when I went long APLD, it's because I heard that this is a perfect one. I mean, I could clear my chart right now of all the levels if you wanted me to, but I'm not going to do it because I like them. And so here, APLD, what happens? Okay. First off, theme. AI is going. They have an agreement with CoreWeave, right? In June of 2025, shoots the stock up from 7-ish to 15, okay? 100% in about 5 days. All right, well, that's overblown, okay? And when there's news, you have to have that judgment as to when is there an overreaction and when is something overblown, right? Or sorry, when something is actually rightful to be worried about, right? So you have to kind of have that spidey sense a little bit and work on it. But when you see something go up 100% in 4 to 5 days, right? NVTS is another perfect example that we talked about constantly, went up 100% in 4 days. I traded it myself. It was from news, and an overreaction ended up coming down, right? But the theme was there, okay? So here, if I'm thinking I need to enter APLD when it has just gone up, it's just doubled in 5 days, that is me forcing a trade. Okay? Got to think back to mean reversion and kind of the law of averages, right? Or just reverting to the mean. It's going to happen. That's the whole thing with the RSI, the indicator that Acro talks about all the time, relative strength index. That's basically what it does. It talks about, it's showing you effectively your current stance against where the average should be. Right. So, and volume weighted average price is kind of the same thing. So You just need to know how to use these things. So things always revert to the mean. Okay. Boom. Well, I felt that the market was euphoric in this move, but I wanted to wait for it to come down to levels. Okay. Well, what am I going to do on APLD when I want to find an entry? Okay. I see that it tops here at about 15. Okay. Well, first I mark a level about 1250. Okay. And I'm going to mark all of these recent highs back in December and January of 2024. I'll mark a couple, and a lot of them kind of get into the, 10, and it's a round number. Just like Acro said, people just trade in round numbers. It's a thing. Just accept it. They're called psych numbers.
Yeah, they're like a magnet.
Yep. 50 here, and then, you go a little bit lower. It gets a little spotty because there's not too much volume there. And then under about 880, you are going to go down back to here. Right, the 770. So there was since it ran up so much, you could expect that it's going to drop a lot. So I marked all of the levels going down using past historical price points. And so as soon as I saw APLD getting back to those, I started dollar cost averaging into it in about the 9s. Okay. Good news. Market was screaming at me. Didn't want to force it. When I waited for it to come back down, it started hitting the levels that I planned on. Okay. That was it continuing to tell me, I'm saying, okay, like I'm getting eager, but I'm still trying to be patient. The theme was totally there, right? They just had a huge agreement. AI theme, great. Old resistance, now becoming support, perfect. Volume, by the way, absolutely huge. Highest volume days ever for the company. Okay. Need I say more? And then, is this an overreaction, and where are my catalysts? Okay. No, I don't think this is an overreaction because it was, in theory, it's turning a non-profitable company more profitable. Okay. It's pretty good. Does it justify a $15 price? Probably not, but I'm going to wait for it to come down because there was just a big move. You should do this with anything. Then dollar cost averaging, getting into it slowly. And then, did I know my catalyst? Yes, there was a catalyst there. I knew, okay, they were going to give status updates on this data center that they were building, that CoreWeave was leasing. And I knew that those status updates were going to come. I knew that they had more potential data center developments in their pipeline, and I was eagerly awaiting those news releases. And I knew they were coming. And again, use ChatGPT, Perplexity, whatever you use to research. And one of your things that you should do is, even if you're buying NVIDIA, know what the catalysts are, good or bad, right? If you're investing in biotechs, it's literally a coin flip sometimes, right?
It's like pharmaceuticals.
I don't play those for that reason, but I prefer things that are mainly supposed to be good catalysts. But catalysts can be the FOMC meeting. Catalysts can be the an earnings release, which they do 4 times a year. So there's so many different things that work into what makes a good buy for me. And it is absolutely exactly what Acro said. And what he alluded to is, you may not have all of these things. They may not all be working. But I'll tell you what, when most of them do, or all of them do,
that's gold.
It is golden. It is money. It does not matter what you're using to do it. If it is something that you've thought through, you've back tested a little bit, or you've traded on your own, you can paper trade, right? Just go look back at old price charts, right? If you're super into this, go research, go spend the time on the charts on the screen, right? Go read, go learn about stuff in the past. Whenever
time spent doing that is invaluable.
Invaluable. Off when the market's not awake, you should be awake, working on it. And you know what? Sometimes I fall victim to that, right? I don't study the charts enough on the weekend. I study them too much during the week. You know, okay, sometimes that happens, but you do your time. The more you see the charts, the more you're going to see stuff like this. I can probably think of 20 examples off the top of my head, and I can tell you exactly what happened at exactly that date. I mean, I can go back to SPY and probably tell you what I felt and what emotions I was having or suppressing during every single dip. Right? Like I talked about this one. I know this is when Facebook had earnings, Meta, whatever. Maybe it was Facebook then. I don't know. It was Meta. But all right, all that, and then when Netflix dropped like 80%, whatever, all that stuff. Just go learn, be a student, and
Absolutely.
uh, and find what works for you. When you find what works, take dabbles of things from each of us, right? Or just stuff that you read on your own, or read from another financial person, whatever. But when it's the convergence of those things that matter. If you only have one, be careful. If something's hitting a past support or a past resistance that now you may think is support, but there's really no volume to back it up, the theme isn't powerful, and there's no catalyst that you have in the back of your head that may force it to go up, you should probably rethink that thesis.
Yeah. And, if you've got 20 indicators on your charts, turn the ones off that are just noise. Find the 3 or 4 that work for you. They give you the most consistent results. And I would suggest journaling as you take a trade, write down what you saw, why you took it, and then look back 30 days from now, and you'll start seeing a pattern that you may not even realize you have in your own trading.
And Acro, I want you to just rifle off. What are the ones that you use? I know we talked about them, but what are they? Give them again, all the 4 or 5 of them.
Well, first of all, on TradingView there's some various volume indicators that are basically all do the same thing. They're just showing you volume traded on that candle. So there's some that color code them. There's some that try to tell you which one, of the candle, how much were buys, how much were sells. I don't pay too much attention to that, but volume, Ripster clouds, VWAP, orb, which I have set to a 5-minute.
Okay.
And extended session high and lows. Those are the only indicators that I have.
And RSI.
RSI, it doesn't show up on my main because it brings it down to the bottom. Some of the other ones that I do have that I will turn on occasion is the volume profile one that you have there on the right side. If I'm unsure, man, is this a big level? Let's see what the volume profile says, and I'll turn it on just to do that research, and then I'll turn it back off. I try to keep the charts clean so I don't have a lot of distraction on it. But those 1, 2, 3, 4 indicators plus RSI is what's on all the time.
Perfect.
I mean, you've got EMAs, SMA, all this stuff that, you can go crazy. You can get absolutely overwhelmed by indicators that are out there. And I think the more complex they are, the more damage they do. They distract you, at least me.
Yeah, I agree. And for me, a lot of these are more softer ones, and I'll list mine off. Just, I kind of wanted us to have them all, and so that everybody could just hear and write them down if they're taking notes. How is the market feeling? Is it yelling at me? Do I feel like I'm forcing something? It's that is number 1. What's the overall feel? 2, what are the overall themes going on in the market? What stuff what's hot, what's cold, what's the recent news? Okay. 3, identify old supports that become new resistances, or old resistances become new supports. And then 4, think through catalysts. Okay. 5, volume, relative volume. Okay. And you can add actually a little moving average on your volume, just on the tip, just the normal standard volume. You can add it to it. Mine is 9-day average volume. So if something surpasses that, look at it more closely. Volume, relative volume. Just, you have to think of it in relative terms. So, a million shares of SPY means nothing on paper, but if you look at it in a relative sense, it does. Okay. And then lastly, news. Is it an overreaction, or should I actually be worried? And when all of these things work together, it creates a great play.
Call your wife, tell her you're taking out a second mortgage, and get in.
And what are we getting into? Or we're getting into it. What are we about to get into, Mike?
I don't know. What are we going to get into, Adam? Banger.
Sunday bangers, baby. Let's go. All right. Okay. I've got a few. I've always got a few. I've talked about this one before. I love it. NXT. I'm telling you, I wish I got into solar when it was down, a little bit lower. Sure, it's up 100% in, recent months, but power is a theme that's not going away. It's just not. And so for me, if I'm going on to NXT, I'm marking this level right at 62, and I'm saying, okay, that's probably a good one to keep in mind. I don't know if it's going to get back there in the near term because it is breaking out. But for now, I'm going to look at 83.40 as kind of the bottom of this weekly range that we've been in the last 3 weeks. And above about 95 is kind of a spot that I would think we go back to all-time highs of 113. So this is one that I'm dollar cost averaging into. I'm almost hoping that it goes lower, okay? I'm almost hoping that it does. But when this is obviously a newer company, and at IPO, it bounced around, and it's broken out of its monthly, all of the ranges. It's broken out. So it's in a consolidation month. I could easily see this going up and to the right for a while. They're in solar, they're in power. It's a good theme. I'm looking for levels. That's the next thing. I'm looking for catalysts. Use ChatGPT. I'm looking at volume. The volume isn't crazy attractive here. There's no big, massive kind of signal that there's a bottom, which makes me think maybe we get down into the 70s. I would hope so, but I'm in a DCA, right? I'm a DCA into this. I like it. Another one, Iron. I know, the data center this, data center that. Iron is a little bit different, and I'm digging into them more. I know a ton of people have been on this stock forever. I wish I was earlier. These guys have control of effectively 3 gigawatts of power. And when I step back and look, I've traded APLD, I've traded CoreWeave, I've traded dang near everything in this sphere. Speaking of sphere, SPHR is actually a great chart. I'm not even joking. It's a great chart. It is. I've been there. I love the place. Anyways. But here, Iron. I'm looking at Iron and I would just, if I got it at 28, which is possible. It's very possible that Iron hits 28. I mean, but the thing is, this one I remember when we on the Iron member on the last run, this thing was a tank. It could have been down 15%, and I'll tell you what, it was gonna go green. Unbelievable. This thing is a very volatile mover. It's a lot more volatile than I thought. But do I think the AI theme is hot? Again, yes. Right now, for now, yes. This is a trade. I do think that this is hot. I think this is stepping back after trading a bunch of them. I think this is one of the strongest players in the space right now. From based on what I know now, from my research. Is the market kind of telling me to do it? Do I think I'm forcing it? I don't really think I'm forcing it. I'm kind of at a local bottom. I'm like 40% from highs if I'm buying it here. I don't really feel that bad about it. And honestly, you look at APLD, it went down 50%, and now it's already back up. So, Iron's kind of a laggard now, right? That gives me that gives me encouragement, right? So it's hard here to look for old support and resistance. I mean, this was kind of there was a candle on September 26th where it bottomed at 39.50 and kind of went all the way up to 44. And at the time, that was kind of one of the bigger dips. And then it quickly recovered, right? So you see buyers have stepped in again twice in the last couple of weeks. So that's going to be a strong level right there at about the 40 psych level. $40 on Iron. I that looks like a key level to me. Could it go lower? I absolutely think so. If it were to, 28 would be an absolutely awesome spot. I think there's a potential it just gets to 30 and never goes straight to 28, or it just kind of does the hover thing and it never actually goes down to 28, right? It seems like, right. So old support or old resistance, old support being same support is also another thing, right? You look at the volume here on September 29th and 30th as an old support, still is a support. And that's enough to me. Okay. We're 3 for 3. Relative volume. Look at all the volume, right? Recovered from a massive volume day. I mean, some of the biggest volume days in history, the biggest volume days in history are all accumulating here, right? Just like right here, biggest volume day on the chart is usually an inflection point. Okay. This one was a high back in November 5th. Okay, well now we have the highest volume day in Iron's history was on December 2nd. And it's 40% from lows. And I say those big relative volume days are usually inflection points. Enough said?
Write that down, folks.
So is this an assurance that Iron is going to go up back to all-time highs and go back up to 80? No, not at all. So these are just things that are clicking and checking my boxes that I want to share with everybody. And I'm sure I know Acro feels the same way. Acro, I don't know if you have any. Let me know. What are you thinking? What are you kind of eyeing? Doesn't have to be a total banger, but it can be a, kind of a sneaky banger.
I entered last week NVIDIA long into January calls, which I like NVIDIA. It's got some, it came down. You had some news out there. I see where, especially with Google's AI chip, they're kind of challenging that market a little bit. I think that news was not nearly as big as the reaction was to it. NVIDIA is controlling the market right now, so I like NVIDIA to make a pretty good run from now to the end of the year anyway. We'll see. No big insight on that one. It's just I like the level it's at now, and I think it's it wouldn't surprise me to see it back at 200 here relatively quick. So from almost a $20 move over the next couple of weeks would be nice on some options. My other one, it's my love to hate relationship with Meta. I'm just not a big fan of Meta. And this is where it conflicts me because it's very hard to be long on something and then also be short on something. And I think Meta may see another hit here and it could very easily get back down to that 595, 585 area.
Meta can be an explosive one in both directions.
Yeah.
So, if it mimics exactly what we see here, this kind of cup, maybe we get like a cup and handle, maybe it gets just down to 650. That wouldn't surprise me at all. But yeah.
I just feel they talk a good AI game, but the AI that they talk to me just doesn't seem close to what's already out there. And, if it's AI for kids, then it's AI for kids or something. I don't know. But again, it could just be that I don't like the stock. And I'm going through charts and I'm going, okay, I've got an old level here at 680. And it wouldn't surprise me to see a big rejection at 680 going back down to 640 to 600.
Awesome.
So, not really a banger, something I'm going to keep my eye on.
Hey, listen, I want you to be more confident in your Sunday bangers. I mean, say it with
I
your
need
chest.
to do a little bit more research. Again, I was a little distraught with my Bears today, so.
I think you need to be more proud of your Sunday bangers. Listen, we've had some good ones. We've had some
great ones.
But
I was so distraught about the Bears that we actually tried to start this podcast 4 hours ago. And Adam says, hey, wow, you're recording during a Bears game. I'm like, no, they're not on until 7. Well, I don't know. They just intercepted the account. I'm like, what? All right, we got to do this later. Goodbye.
This is a true story.
Yeah. So my head wasn't there for my bangers this week. I tried looking at them. Those are the two that popped up for me anyway that I have interest in: Nvidia and Meta.
Awesome. Okay, perfect. Well, everybody, again, if you haven't already, make sure you follow all of our platforms. Follow me, follow Acro on X, follow Beyond Trade Pod on X, subscribe on YouTube, follow on Spotify and Apple Podcasts, and give us a rating. The more that you do that, the more we bump up in those algorithms, and we're just looking to spread good words to good people. So that's what we're trying to do. Now, everybody, get your bangers in a row.
Yes, sir.
And hit your bangers.
And we're looking to get some good lineup of some guests to have on this next year as well. That I think will be very good. I'm excited.
I don't want to spoil anything, but I know a lot of people on the old Bird app, Twitter, X, and I think we can get some pretty interesting folks on here that have a lot to say about a lot of good things. And you know what? It's not just X personalities that I'm going to bring on here. I intend to bring on some big-time industry professionals. Like I said, history sometimes creates wonder. So don't underestimate what we can do. 2026 is going to be a beautiful year.
Yeah, you don't know unless you ask. There's a couple CEOs I have in mind that I would. We'll see if we can't snag one or two.
I think the future is bright. So let's get out to more people. Let's have an awesome week. Everybody be disciplined. Have gratitude. Be grateful every single day. Think of a new thing to be grateful for, not just the roof over your head.
Leave us some comments. Let us know what topics you'd like to hear too.
Absolutely.
We've got lots of ideas, but it's, like to see what you guys are interested in.
We'll hit them. This is for y'all.
All right, guys. Have a good week.
All righty. Bye-bye.
Peace.